Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Antech Markets for Tuesday the 6th of May. Moving into today, the dollar has actually come under a significant amount of pressure early on, and that's carried on from Friday and yesterday as well. So the what we're seeing is all these FX pairs moving away from the dollar, as a little bit of risk sentiment has cost the dollar some ground there. Going to look at first of all the Vix Index. That had a jump yesterday, back higher again, and certainly it looks like the Ukrainian situation is still affecting things, and certainly with that spike high yesterday, we'll see how that moves today. So it looks like initially that the dollar coming under pressure could well cost the VIX and push it a little bit higher. Look at this move on the dollar index. That's down now back to the lows of October, and it is significantly lower and pressurizing that low. If you take that all the way back, you're then back to the beginning of 2013 again. So there's real pressure on the dollar in early hours of Tuesday's trading. It looks like the OECD has cut its forecast for global growth, and also moved its forecast for other economies as well. The global growth was cut from 3.6 to 3.4. US was cut to 2.6 from 2.9% in November. Other countries that were cut include China and Japan as well. So interesting moves there for the major global economies there. The expectations of lower growth in this latest round of forecasts for the OECD. In contrast to that, the the Eurozone was actually increased, had an upgrade of its growth forecast to 1.2%, and also the UK had its growth forecast upgraded to 3.2% from 2.4% in November. Now, the OECD has also recommended that the ECB, or is trying to urge the ECB to do some sort of more stimulus to tackle lower inflation. So that is another high-profile agency that is trying to help persuade the ECB to act. So we'll wait and see what happens there and the impact of that. But certainly the pressure on the ECB to act is growing at the moment. Today's data that we've had out today is on the services sector PMIs. Eurozone and UK are all out today. To be honest, the Eurozone was dead flat, 53.1 for its PMI. Germany had a slight miss, and France had a slight beat. But the UK had quite a big beat of its service sector PMI. That came in at 58.7, much higher than the 57.6 that had been expected, which again had been expected to be flat on the month, but it was much better, and that snaps. Certainly looks like the services sector is beginning to put on an improving trend. That's a 4-month high for the services PMI for the UK. So that has certainly helped the sterling to push higher today. So around about 0.5% up on the dollar at the moment. Euros around 0.4% up. So these currencies are making strong gains against the dollar today. That leads me on to my chart of the day, which is the Aussie dollar. And again, this is another currency that has put on a significant amount against the US dollar today. It's up 0.4%, 37 pips at the moment. And that has now snapped that decline that we saw on Friday. That was the non-farm payrolls move, and the Aussie dollar has bounced bang on the 92 big figure level, and is now looking to challenge the key resistance of the 93.14 area. I'll show you in a minute how important that resistance is, and I think what we'll be looking now for is a move. If it can get back above this 21-day moving average, then it'll start to certainly improve the outlook. And these momentum indicators are turning higher. Both the RSI and the MACD just look as though this recent move lower was just a correction within the bull phase. Or the medium-term bull phase anyway, and has just given another chance to buy. So we wait and see how this one moves, but it certainly looks increasingly positive as today has gone on. Intraday, it's broken this downtrend now that had been in place since early April. But 93.14 is this support that has turned into resistance over the last few days, last couple of weeks actually, and it now is challenging that once more. The spike higher early on today was actually on the announcement of the RBA. That it actually kept flat interest rates at 2.5%, but there was a spike higher and then lower, and but throughout the morning the rate has begun to strengthen once more, and that looks like that 93.14 level is the key test, and if it can try and move and sustain a move above there, then the outlook will certainly begin to be improving, and you could argue then you would have completed some sort of arguably a base pattern as well. So it's there's a lot riding on this 93.14 level. If it can break above it, that would certainly turn the outlook far more positive for the Aussie dollar. Anyway, I wish you good luck in your trading on Aussie dollar today. There is the impact of the US trade balance that comes out at 1:30 this afternoon. The expectation for that is for an improvement, slight improvement to $40.3 billion of deficit, down from 42.3, so a $2 billion deficit improvement there. And that comes out at 1:30, so we'll wait and see the impact on that. If it's higher higher or more positive than 40.3, then that would be dollar strong, and that would pull Aussie dollar lower. So we wait and see on that one. But I wish you good luck in your trading today, and I will speak to you later. Thank you.